Gold demonstrated impressive resilience again last week, rising 3% and surpassing $2,500 per ounce for the first time in history. If you own gold, you love seeing it break price records. What's even more exciting is the underlying narrative. So listen up and get ready to get more excited. Before we begin, remember to like this video and subscribe for more economic updates. Mike McGlone, senior macro strategist at Bloomberg Intelligence, detailed what he believes is the true catalyst of the metal's current bull run, and his belief that this bull could stride further from here. While acknowledging that gold is up roughly 20% year to date, McGlone clarified the metal's current uptrend actually began years ago. In fact, gold has been one of the best performing assets of the last 2.5 years, despite what should have been a hostile monetary policy environment, with interest rates at 23-year highs since last July. On a year-to-date, 1 year, 2 and 3 year basis, the rock is beating stocks, marveled McGlone, who added, "It's beating the S&P 500 total return." As for what he believes is the root of gold's tremendous performance, McGlone shared his view that a sea change in geopolitics has been the metal's fundamental driver. The key thing to remember about gold is to mention why it's going up. You have to start with the unlimited friendship that started with President Xi and President Putin, 2022, and then Russia's invasion of Ukraine. That shifted the world order, tilted it towards gold. McGlone sees rising stock market volatility as a prominent gold driver as well. Referring to the Chicago Board Option Exchange's Volatility Index, known simply as the VIX, McGlone said that, in his assessment, the measure is currently in the process of bottoming from the lowest level since 2018, so stock market volatility is mean reverting higher. We saw what may have been an example of that volatility in action at the beginning of August. The S&P 500, which is the index tracked by the VIX, suddenly fell nearly 6.5% during the first 5 days of the month. Other leading indexes dropped further, including the Nasdaq Composite, which sank more than 8% over the same period. Along with many other analysts, McGlone says that broader, higher risk environment is not lost on the world's central banks, which is why, as he put it, the biggest deep pockets on the planet, i.e. central banks, have been buying gold. Sure enough, when central banks were surveyed recently as to why they've been buying gold at or near record levels since 2022, the top 3 answers were the metal's property as a store of value, its performance during crises, its potential to diversify portfolios. In other words, central banks have effectively said they value gold's potential as a hedge against risk during a period that McGlone says has been characterized by a shifting world order, a world order that BlackRock has called the most fraught global environment since World War II. It is the foundational nature of the drivers that have supported gold, including central bank demand, that have prompted McGlone and others to suggest the positive momentum could continue. As metals analyst Peter Spina said recently, there remain many market risks, and gold buyers recognize the many and various instabilities around the world, geopolitically to financial economic risks. Gold is benefiting as a store of safety. Spina thinks gold could touch $3,000 per ounce by the end of Q1 2025, saying, "All the ingredients are in place for gold to roar to record highs in the coming months." Given what he believes is the continued viability of the metal's current sources of support, Bloomberg's Mike McGlone thinks $3,000 per ounce gold is a possibility as well, saying, "I think it's just a matter of time." As you begin to understand the underlying narrative about gold, you could see why gold holders could be getting very excited about the future of gold. Until next time.